Hello and welcome to the Good, Bad and Ugly weekly review for the week ended 22nd November. A quite a volatile week where the news for case against Adani that has been filed in the US hit the markets. Of course, it roiled all Adani stocks, but it had a bad impact on the market as well. But very surprisingly, on the last day of the week, uh, the market shrugged off all these fears and had a 500-point plus rally. So it does seem like overall the markets have sort of bottomed for now. Um, the another uh, major issue this week that is going to get resolved is the state elections outcome, which will come out on Saturday. And that result is also going to impact the market in a big way next week. But first, let's see what we did in the weekend investing research desk stories. So there was a story on gold stock to flow dynamics. This is very unique and key dynamic that you would want to, get your hands around. Then there was a story on money debasement on FPI holdings, importance of free float, uh, whether one should be staying away from IPOs, the next decade's forecast, gold central bank history, and should you get out of sectors based on percentage drop. So some very, I would say, thought-provoking content is there on the app as well as on YouTube. Do go through it. Uh, there is a newsletter as well. We do a weekend special as well, where we will back up the idea with a lot of data. So this time on 24th of November, you will see a episode which is essentially comparing the timing of your SIPs and the impact of it on your portfolio. All this and more on the Weekend Investing app. And as I was mentioning, this last day rally, we had a short week, 4-day week, was not expected at all. Uh, but if we see the support points, for many weeks I have been saying now that the election day high, pre-election day high of June, is a major support point for the market, and that getting broken will send a signal that the market is really weak or really getting weak at least. So this if I were to sort of also go back to the previous one, so this 23,300, 23,400 is a sort of a base that is getting formed here, and a 500-point jump on a pre election poll day does give you a lot of confidence, I think. If it is a total disaster, then we may lose everything. But I think this is the starting of this leg upwards. You can see that there were almost 8 weeks have gone by, and even on the RSI charts and other indicators, market is rather oversold. You can see here also, whenever there have been falls, there have been relief, releases. So 3 week fall, 4 weeks of sideways, 1 week fall, 3 weeks of upward trend, then 1 week fall, 1 week up, 3 weeks down, 3 weeks up. Here it had become excessive, especially as of yesterday, Friday morning, and that relief valve has opened up, and prices have gone down. I still don't know whether they will continue, but having closed at a 2-day plus high is a good indicator that there is probability that this leg can now go up. So for the week gone by, Nifty has clocked 1.6% gain. Other indices are at 1.3% to 1.2%. Next 50 is at 0.9. This has underperformed largely because of Adani stocks in it, and small caps have not really participated much at 0.7%. Um, for the MI Evergreen, this week was good at 3.9%. NG 50/50, the free portfolio also did well at 3.4%. Others were between 2% and 0. and two strategies of small cap actually lost money 0.2 and 1.1% on MI25. Some of the strategies that are um, focused towards small caps have underperformed this week as well as for the financial year. Even the India top 10 is underperforming right now. But as we have seen many times in the past, these underperformances come around, especially when the market is in a boom phase. Real estate stocks did very, very well this week. This is very important because if markets were overall weak, then these high beta sectors were the ones that would have gotten beaten the most. And this has got a very good fillip of 6.3% this week. And financial year is up 11.7%. IT stocks also doing quite well, autos doing quite well. So overall, I would say that this week was reasonably satisfying and no major damage as such has happened here. So in terms of sectoral momentum, you can see IT, bank, financial services. These are the ones that are ruling the average momentum scores. Real estate, and then you have pharma. So these are the industries where you should look for trades if you are a discretionary trader and look for setups there. So let's look at a special in the strategy spotlight, two trades and two different results. So case study is of BSC Limited. So trade one, we bought and we lost 37%. We bought somewhere here and we got out somewhere here and we lost 37%. And uh, uh, after getting a loss of that kind of hit, a lot of time many portfolios will give up on that stock, that we will never buy this again, right? But in when you are sort of uh, not worried about what name of the company is coming in your portfolio and you're going as per your strategy and algorithm, then the same stock can come again and give you a great result. So here we got one big loss on BSC, but the same strategy got 273% on the same stock and still holding it at 3.7 times the entry price. So this usual behavioral issue that we see in discretionary investing mostly, that once a stock has given us some loss, we tend to not get there or go there, or even if some stock is going up and let's say it's making a new high, so it is indicating to you that it is likely to go higher, but then there is a you know a retest of the breakout or a whiplash trade and you get out in that move. It really does not mean that the next time the stock is giving you an opportunity to buy again, a setup has come again, that you should have any bias towards that stock. So there could be a stock that may give you 4, 5 losses and then one very big return. It may happen so like that also. So no, don't have any kind of bias against any particular stock, especially if you're doing non-discretionary investing like we are doing here. So we don't want to keep any bias against any stock or have any filtered out stocks that these stocks have not performed well for us in the past and hence we will not include them in the future. So, this is essentially removing all kinds of bias, just simplifying your investing, not having any hesitation to go into any stock. Um, so you are like in a complete Zen mode that whatever my algorithm is going to tell me to buy, I'm going to buy it. Of course, there should not be any red flags from the exchange or SEBI or all that, or any volume filter issues. But beyond that, I mean, past results of any stock should not really make a difference. So this is the strategy that has seen this particular performance, MI20, and this runs on the mid and small cap index of 400 stocks. It selects 20 stocks out of those 400. It's done fairly well in the period that we've started from July 2021 on this strategy. And it is rotational in nature. Every week we will review. Sometimes there are some changes, sometimes there are not. and has done reasonably well for all its investors. So consider that in your portfolio mix if you don't have much of mid or small caps. So thank you so much for watching this, and I'll see you in the next one. Bye.